The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 1st, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go we're going to try to figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. And if you can't dial in, we've got you covered. Just let those fingers do the walking. That's right. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the den, like Peter from Park City, just go ahead and send me a ping. Any kind of ping will do. So let's go ahead and get this show started on magical, marvelous, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trade up 261 points. 26,189 is the print. S&P's up 27 points. So everything up about 1%. Russell 2000 only up 0.8%. Semis are up 2+% out there, as are the transports, just slightly over 2. Spot volatility index is flat, trade out at 1370. Gold is back $3. Silver off 4 pennies. Light sweet crude up $1.33, trade out at 61.61. Lead the charge to the upside. Dollar-wise, it's Amazon up $30, followed by Google up $20, followed by Booking Holdings up 18, Mercado Libre up 15, NetEase up 13 and change. To the downside, it's at ABMD, ABIO Med, down 877, a little over 3%. Lyft is off 850, nearly 11%. To the downside, Domino's Pizza, burning their pizza. They're down $7.86. That is 3% to the downside. So let's go to our first question. That's coming from Peter in Park City, Utah. He wants to take a look at the full review of the ES Mini. So what do? Do we start short-term, long-term? Where do we start? I tell you where we start. Let's start by let's start short-term to long-term. I think that's the easier way. And if it's not, we're just going to do it. So when I say short-term, I'm really referring to the 30-minute time frame chart out here. And here's what we know right now for the ES Mini. Looks like the bar, Peter, that we're trading in on a 30-minute basis is going to be, now this bar does not complete until 1:30, but looks like we're going to get to bar number 7. Let's say that the ES Mini continues to move higher, or at least we see a close on the 30-minute basis above the close of the bar 4 bars earlier. As long as that continues, this would say we would get to bar 9. So let's see, at 1:30 we'd have 7. At 2 we could have 8. At 2:30 you could have 9. And at 3 you could have the bar after 9, otherwise known as bar 10, but we don't have bar 10 marked on our charts out here. So if you're looking for a short-term top, Peter, chances are it comes around 2:30 to 3. That's what I would be watching, but we don't know if that's going to be the case unless we continue to see each of the current bars, each of the bars that form in successive bars, close above the bar 4 bars prior. Price is moving higher, doing less relative. Now, look, the last time that we had bar number 9 on a 30-minute basis out here, that took place at 22:39, 8:30. 22. No, that would be 10:30. Just give me a second and I'll get my math going here. And we can see that bar 10, the bar following bar 9, made a slightly higher high and then price started pulling back. It was really just a sideways-ish move, but it's one of the reasons why we would go ahead and take a look at that. That's the 30-minute time frame chart out here. Hope that helps you out. Let's go see what's going on by multiplying that times 2. We like multiplying times 2, at least for the next chart, maybe the one after, where we go to 60 minutes. So on the 60-minute time frame out here, what is it that we see? Price moving higher, doing less relative energy. Looks like this 60-minute chart that ends in 2 could be bar number 6 out here. Again, it just has to close above the bar 4 bars earlier. Not seeing any topping signals, just patterns to be aware of, kind of like, hey, it could rain today. Take an umbrella. If we take a look at the multiply that times 2, we get to the 2-hour chart, the 120-minute time frame chart. Now, this chart here, and the current bar, I believe, is going to end at 2. Let's confirm that. Yeah, that will end at 2. If the current bar, so Peter, here's what the 2-hour time frame chart is suggesting to you and I. See the green, solid green line out there, that was established by that Tommy DeMark setup trend line. And we know the high during that session out here was formed here at 4 o'clock in the morning back on March the 22nd. And when price breaks above, closes above it, not breaks above it, closes above that, that is a that would be a bullish message out here. So in essence, what you're going to want to be watching out here, kind of simultaneously, is that high, which is 2862.75. You're at 2865. So again, different time frames are going to give us different signals out here, and they do all work together. So that's what the 2-hour time frame chart. Let's go take a look at the 5-hour. Yeah, we decided not to multiply times 2 and take that up to 240. We just simply went to 300 out here. And on this, what we're seeing is the 5-hour chart is saying what the ES Mini wants to do is move to higher price. Now, it's got to be able to clear this level right here. Let me get you the price. That would be the 2866 area. You're 2865 right now. So closing above that would be closing above resistance. That would suggest higher price. That's what the 5-hour time frame chart is communicating to you and I. Now let's go take a look at the daily chart out here. This again for the S&P 500, or really the ES Mini, the futures contract. The reason why we take a look at this is just simply provides you and I with better, more important data out here. And so what we can see is that on the daily basis, what you and I just looked at on the 5-hour time frame chart would hold true as well. We had that little bear sash candle on March 22nd. That says the resistance is either the high of that candle or the candle before, the one that it sashed to. Yeah, that's what. And that's, we already know what that level is. That's that 2866 number. It could be resistance. Let's see if there's a close below that level today, 2866. Here's what you know. Resistance will have held at least one level of resistance. And finally, even though the week just began, let's go take a look at the weekly time frame chart out here. As you may recall, bar number 10 on this one, the bar following bar 9, did generate that Tommy DeMark setup 9-count pattern. And if price this week closes over that 2866, yeah, you're going to get to the all-time highs, or you should get to the all-time highs. Hasn't happened just yet. Peter, there's your ES Mini for 5, 2, 4, 6 different time frames. Let me know if you need any other information, and if so, we'll provide it to you. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go out to Sarasota. And John writes in, and John says, "Hey, Steve. Hey, John. Can you share what CBRL, folks? That is Cracker Barrel. What they might be doing." So, and I suppose the reason that John is asking, they're trading quite a bit lower today, wide-ranging bar to the downside. I looked for some news. I didn't see it out there that popped up on my screen. That doesn't mean there's not news out here. But if we take a look at what Cracker Barrel did on Friday, it closed at a price point of 161.61 today. Right now, trading at 157. Buckaroonies out there. Cracker Barrel. Everybody loves Cracker Barrel, right? Hey, they force you to walk through that store on the way in and the way out with all the old time, candies out there. What's your favorite, John? What is your favorite? I've got many, unfortunately. I like those. Those little sticks, like the root beer sticks. Boy, that's not really a good way to describe it, or in any event, or anything that's a lemon. But look, let's just go take a look at Cracker Barrel, because most people go there for the ham. Or I guess the turkey dinner. Hey, that's pretty good. I'm not going to be a spokesperson for Cracker Barrel, but John wants to know, hey, what might this be doing? It's pulling back, that's for sure. Hey, the bottom of its daily profile, it's a bearish structured profile under. So, folks, if you're just tuning in, maybe you're new to the show, that's hey, and then if you are, welcome. The first, when somebody requests information about, especially an individual stock, what we do is, one of the first things we do is we take a look at the daily, weekly, and monthly time frame. Each picture may be telling us a different story out here, and then what we do is we just look for support and resistance, right? First role for you and I is to identify support and resistance. Well, one of those ways that we do that, and just by taking a look at the chart, is look at the horizontal lines that are out here. In this case here, the bottom line is, when I say the bottom line, I'm not referring to the bottom line, I'm referring to the bottom line, which would be the level of support. And you can see on the daily chart, which is the left-hand side, that green line, that bottom line is 156.25. So the very first thing, now the structure of the box, John, was bearish in nature, meaning the center line at 161.25 was very close to or much closer in proximity to the top line than the bottom line out here. So sellers should be able to flex their muscles, push price down to 156 and 25. Now, the problem here, John, is if we take a look at the weekly time frame chart, the weekly time frame chart shows that price has been below the weekly bottom of that box, support that maybe is now resistance for several weeks out here, month and a half or so. Inside the monthly profiles, it would say that price should head back to 154.68. No, last month was not a hammer candle because the market basically had been moving sideways out here. So 154.68 and 156.25 is what the message is out here. But let's look at the weekly time frame chart. Well, first, if we look at the weekly time frame chart, why did it stop? Why did price kind of stop where it did? Well, on the weekly time frame chart, what we can see by taking a look at, and when I say stop where it did, I was referring to the November 30th area where price made a high, and that high out there happened to be bar number 8 on a weekly basis of that 9 count. Is that important? Well, if you just go back and take a look at the last time on a weekly basis that Cracker Barrel topped, it did it with count number 9. That was February 2nd, 2018. So, yeah, I would say that it's important. Now, on the weekly time frame chart, using these other support levels, this would take you back, John, to the week of October 12th out here. That's and that's really where I would be going with this at this stage of the game. So price may be pulling back. This level is 147.20. So 147.20, we got 147.20, 156 and a quarter, and 154.68. Now below 154.68 gets you in the 144.24 level. Notice how I'm not saying that this is pulling back to a level or a place where it should be bought. Now, volume-wise, it's trading into the swing point basically from March 2nd, which had 469,000 shares. You're already 243. Seems like mathematically it's pulling back with similar or maybe a bit more volume out there. But again, I get back to the weekly time frame charts out here. Maybe this is just in a good old-fashioned consolidation, John, and price is pulling back to this 141 level out here. But I don't see this, if you were asking, is Cracker Barrel a buy, or is it a buy at the bottom of that box out there? I'm going to go with no. I'm going to go with let Cracker Barrel make this A to B equals CD to the downside. You see, the B point was the week of December 31st, 2018, 2.2 million shares. Boy, that was the week beginning, by the way, December 31st, holiday week. Volume probably could have been stronger out there, but we just got to go with what it was. As that was being attacked out here the week of March 4th, similar volume, 2.3 million shares out there. So maybe there's an A to B equals CD that just gets you back to the bottom of that consolidation area in the 141 to 144 level. So if you're asking Stevie, what is Cracker Barrel doing? If it cracks, closing below 156.25, that 144-ish, 141 level, John, is what I think the chart is communicating to both you and I. Thanks so much for writing in. No other requests out here. We do have we got a caller in line. My apology, Brent. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for holding. Thanks for calling. How are you today?
I'm doing fantastic, Steve. How about yourself?
I am doing well. So Brent is in a trade or investment in light sweet crude. Got back into it fairly early, down in the 46-ish type area, trading at 61.49 right now, which is atop on top of the daily profile, which was 60.39. How can I help you from here?
Well, that was going to be my question. I was wondering if there had been any new market profiles have formed since we talked last.
There have not. And maybe when we were talking, the candle might have turned orange. I don't recall. But the good news is, one of the things I would guess that we talked about last week was just simply the mere fact that if light sweet crude were to close above, and it looks like it may do that today, 60.39, then that would suggest that price was headed to 65.40 level out here. And that is the top of the weekly profile. So that would become its next target. If I look at and I really think that's where price is headed to if we look at this version of the daily chart, and that is because what price has also done, it's overtaken that nice Tommy DeMark setup 9 count out there by just simply moving sideways. And so it tells about really the strength of the move. Now, I say the strength of the move, but the but the higher high, it has achieved a higher high with less relative strength, so to speak. So which of those two is the one that's telling us the right story right now? Well, the one that's being painted on my screen doesn't tell a story unless we were to see some type of bearish reversal signal. And not necessarily today, but, you know, whether it be tomorrow or the next day. But until that shows up out here, what my charts are showing is that light sweet crude wants to continue to move to higher ground. And the weekly time frame chart out here, Brent, already recycled that little Tommy DeMark setup 9 count. It did that the week of March the 15th out here. And on this chart, so the longer term chart out here, says that price could even be headed up into the 75.35 level. So, hey, we're about to go to break, and I apologize that I didn't see you when I was doing that last segment. Why don't you hold on, and we can finish this off and answer any other questions you've got.
That sounds good. Thank you, Steve.
All righty. We'll be back with Brent in Martinez, California in just a few. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're taking a look at Light Sweet Crude with Brent Martinez, California. So, Brent, I know when you got in this trade here, you were looking at this from a kind of more of an intermediate term standpoint, I believe. And do you have a target, or do you have any concerns with regard to what you're seeing in Light Sweet Crude that we can take a look at together?
I decided to almost like, I guess I would relate it to the gold price or gold contract itself, and then using mining stocks to play that. I'm just in something that's in the oil sector itself, and then hopefully, oil is going to move up, and that's going to follow with it. So I haven't really been trading the contract itself. I've just been trying to play oil in that respect.
Yeah. Okay, good. So, what we looked at before the break, everything looks positive, at least at this stage, right? So we never know what's going to happen next. We never know some world event or anything along those lines out here. There's another chart here that I can put up that you can take a look at. And this way, it gives you 4 time frames. And it shows you what each of them. Let me try to just move this around so that you can actually grab it, or anybody that is watching this on Tiger TV or in the den. And that is looking at light sweet crude. Now, this is my synthetic contract. And what I mean by that is this allows me to, instead of it's a version of a continuous contract, but it allows me to stitch together the historical contracts in a way that make the TAS market profiles useful. And so, as we talked about earlier, it's above the top of the daily box. That would be bullish out here. It's above the top of the weekly box. We had mentioned that, so that too is bullish. And the lower left is the monthly time frame. Now, the lower left box out here, it has a bearish structure to it. And what that means is that the center line at 66.05 is much closer to the top at 69.05. So if there are sellers lined up here from a longer term or monthly standpoint, Brent, it would be in that 66 to 69 level, which my recollection is it kind of ties out to the to one of the levels that you and I had looked at on one of the other charts out there. I think it was actually the weekly time frame chart, but for the current contract. So this is going to show different profiles. They are all useful to both you and I. But that's what I would be saying is going to be, unless there's some other event that takes place and we see some type of bearish reversal signal to force you and I to go back and take a look at it, it looks like light sweet crude wants to continue moving higher. And I say 66 is that next area, 66 to 69. So I don't see any reasons to, jettison the trade that you're in.
Okay, that sounds great, Steve. That's all great information. And one thing I've never asked you, and I don't want to take up too much time, but I'm assuming in Florida you must do some kind of fishing, right?
Yes, I do. And now I do it when a good buddy of mine who is a great fisherman, he relies on me for chart analysis. I rely on him for fishing analysis. And it's great to go out with a master, and it's always great to, there's nothing like catching some fresh fish, coming home and cooking it. Or, a lot of times we don't cook it, if you know what I mean.
Sounds good. You guys have a lot to, many varieties of fish to.
There are. It just depends on the time. It just depends on the time of the year out, and so off of the coast, you don't have to go too far out before you are in the, what do you call it, the stream, the Gulf Stream out there. And so you get out there, we're basically looking for seaweed and birds, and that's one of those signals. And, and the water's fairly deep, at least 1,000 plus feet out there. And so, you can catch grouper, but we catch, oftentimes we just catch blackfin tuna, and other fish. And it's great. It's a wonderful benefit of living here.
It's always good to have a built-in guide who can take you out there and get you into the fish. That's great news. Well, thanks for sharing, Steve. You have a great day and enjoy your week. You bet.
Thanks for calling, Brent. And what's really great, folks, is that my buddy, who's just a master fisherman, he's even gone out. So he's got another guide, a guy that's even more masterful than Kevin is. So it's a beautiful thing. Okay, I checked the emails. I didn't see any other requests out there. I don't see anything else in the den. The one thing that was asked for, we got taken care of during. Oh, I see one right here. So here's one coming in from James. And really, folks, if you're just please call in like Brent, or just email me, Steve at TFNN. But on the email, you really should do it earlier. The earlier, the better, because especially towards the last break, 2 minutes, it's hard to get to everything. And I have found that sometimes people will send me an email, and like an hour before, just because of internet service providers or what have you, it doesn't always get to, it'll get to my cell phone, believe it or not, before it gets to my normal system. But let's just get to the question here from James. James writes in, says, just wanted to get your thoughts on SMG. I don't know what SMG is. Smegma, I believe it is, but that's not what it is. But let's go take a look at this, and then we'll get to the actual question. So I'm thinking of starting a position here and adding if it takes out the most recent highs. Seems to be stuck in this consolidation, digesting the recent run. Not sure if it's got the buyers to push it up. So let's go take a look at it. And this is Scott's Miracle Grow. And so if we take a look at Scott's Miracle Grow, well, here's the one thing to say, don't get in just yet. And we're looking at a daily time frame chart. So what I would suggest, James, is in this case here, where there may be a change in trend taking place. So when I just looking at the daily market profiles, you had this gap to the downside with volume. So volume off of the highs, and that was on March 20th. And it was volume off of the highs, and it was a close below the bottom of a daily profile. If you take a look at Scott's Miracle Grow or SMOT's Miracle Grow, whichever one you want, and you go back to the December lows out here, very similar to what we've been watching for inside the equity futures contracts on a daily basis. What you will notice is that any pullbacks found support where it should have, which is either the center of the box or the bottom, especially coming off of the lows out here where the new box formed on December 27th, and that was a bullish structured box out there. Well, if we take a look at, and so the first time that we see it close below the bottom of a profile is March 20th. Says there may be a change in trend. Now we take a look at, and there has been a bounce over the past couple of days, bullish structured box, which held on March 27th, says that buyers should have been able to push price up to the top of the box. And the top of the box is where we're trading right now. The top of the profile is 79.52. It's trading at 79.51. Now maybe, James, if you get a close above 79.51, then maybe, okay, the change in trend is back to the upside out here. But if this holds its resistance, the better buy could be at 76.72. But what we need to do is go take a look at the chart out here. The other thing that we'll notice, and I don't know how this works, but not only did the top of the box hold there's resistance, so too did Stevie's green line. Natural resistance out here. So at this stage of the game, I'm going to say you've got to be, based upon the daily time frame chart, you've got to be patient. It confirmed the Rhodes Momentum Indicator top. This was on March 2nd. This was well before that gap to the downside on March 21st out here. So now you've got topping patterns, topping signals, changes in trend, and Scott's Miracle Grow just moving up to resistance right now. If resistance fails, maybe we've got a different take out here. On a weekly basis, we're going to break. But if you look at the weekly basis, this top with a Tommy to Mark setup 9-count pattern. I'm saying not yet. Not in Scott's Miracle Grow, James. Keep those hands in the pocket, so to speak. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 268. Trying to download the most recent sailfish that we caught off of my cell phone. Struggling to do that. So in any event out there, no other requests that I see in out here, either inside the den or by email. So send in those requests, Steve at TFNN.com, or give us a call at 877-927-6640. Let's go take a look at a few other things out here. Plenty to look at. Let's look at the New York Stock Exchange. So if we take a look at the New York Stock Exchange, here's what we know. And we looked at this on Friday during Friday's show. We noticed that the advanced decline oscillator reading was above zero, and it did close above zero on Friday. The actual reading was 1408. Today you're trading at 66.96. Now when it's above zero, and today you've got follow through, tells you that buyers are in control. Now, believe it or not, and you probably won't believe it, buyers were not in control based upon using this indicator. You might say, this indicator is crap. It's really not. But the sellers, in essence, were in control from April 28th, with the exception of one day, until last Friday, meaning that advanced decline. Now, if you take a look at the New York Stock Exchange, you're going to see pretty much consolidating, so to speak, out here. Higher highs and higher lows, but still was not really much movement out here. That is not the case that we are seeing today. So we're watching to see if this can get up to the plus 150 level or just below 150, and it would turn down, causing a plus 150 failure, so to speak, out there. That would suggest some type of pullback. But right now, as we speak, looks good. The spot volatility index well below the 50-day exponential moving average. Look, we know how this works as well. When price is below that, it is in full bullish mode. Because it means that there's lots of liquidity. Get rid of the connotations of people calling it a fear gauge and saying there's no fear and all that kind of minutia. That this guy just makes me want to. Well, I won't say that, but just use it this way. Because it has plenty of meaning that you can use. It really even helps those that go short, because if you're short, you've caught some type of top on a short-term basis, a daily chart, and you see that spot volatility index get up to the 50-day and turn back down. It's really telling you, hey, take those profits. That's really what it's communicating to you. So at this stage here, everything looks good. Might as well check in. We talked about on Friday the high yield bond fund. There are several out there. Now, this is kind of interesting. So if we take a look at the high yield corporate bonds, almost created an island top out there. Now, maybe it did. I don't know. Let's go see. The low of, let's look at the box. The low of Friday was 86.30. The high today 86.28. Now that is as what was the guy? Wasn't Schultz? Was Schultz? Yeah, Schultz said very interesting, right? And then who else? No, Schultz said I know nothing. And it was the guy from Rowan and Martin's laughing out there, Artie Johnson, right? He was the one that said very interesting. Well, Stevie is saying very interesting right now because we've looked at it before. I'm not going to go do this, but there is a directional correlation between high yield. See, when we take a look at just like you look at the spot volatility index in the 50-day to tell us whether there's plenty of liquidity or not, we can also look at in this case here, it's the iShares High Yield Corporate Bond ETF. So it'll be interesting to see over the next couple of days. I anticipated to see this moving higher. Yes, I see that the 30-year is pulling back, and it made its way up to a high. We can go take a look at that. And it is up at resistance now, pulling back to support, and support is quite a ways to the downside out there. I anticipate that's where it's headed to, but we do have an island top out here inside of this, so it's something to pay attention to. It is definitely something to pay attention to. So let's just go back over and look at what else is going on inside of the spot volatility index out here. Somebody had posted something in the den, which alerted me to saying go take a look at it. And what I mean by that is, you see these green diagonal lines here at the top chart, which is the S&P 500, shows price moving higher. Now, I don't have that everywhere, my price moving higher. I just showed that when the spot volatility index is also moving higher on a closing basis out here. Because that's always been an indication. Doesn't tell you to the day. You've got to look for other patterns. Tells you of problems ahead. So it's another way to successfully utilize the spot volatility index. In this case here, we're doing it on a closing basis. And it is still a higher low than way back here. When I say way back here, I'm referring to March 15th out there. So we did, when that was moving higher, the spot volatility index and the S&P, we did get a little bit of a pullback. It wasn't, but it was a pullback to support. Remember support, if we go take a look at it, where was that? It was the bottom of its daily profile. That was taking place right here on March 25th. Look at the left-hand panel of my screen. The bottom of that profile, that blue line at 2,800, was support. And so we saw how that played out inside the S&P 500 and the spot volatility index by going back here. So now what we've got is we've made a higher high. What I mean by that, inside the S&P, if we take a look at the high from March 21st at 2860, today's high, and we're trading above it right now, 2863. So we've got that higher high, and we've got to watch this, so two signals, high yield corporate bond fund, and it's up island top as we speak right now. And we've got a rising bottoms pattern inside the spot volatility. Two vehicles that allow us to kind of hone in on the message behind the scenes. What's going on behind the covers? Is everything hunky-dory? Is it just dory out there? And I don't know what that means. It's just where it took me. Okay, so what does that mean? At this stage here, price is going to continue to move higher. Peter from Park City had us looking at that 30-minute ES mini chart, and so this is all in essence related to that. So watch for the 2:30, 3 o'clock time frame, because that's where you could see a pullback. I'm not saying that's the high. I'm saying that's where you could see a pullback inside the market, assuming that we continue to gradually move higher at 2 o'clock and 2:30, and then they get to that 2:30, 3 o'clock time frame is where we get into that potential on the 30-minute chart for that 9-count pattern out there. I had mentioned bonds earlier, so in one sense, let's go remember, but if we do look at the 30-year Treasury and consolidations, the first area here from 146 to 143, that was the consolidation pattern that was present inside T-bonds. Once price broke above that, which was on the trading day of March 20th, then what happened is price made that measured move. It actually did more than that, because the measured move says you're going to typically be greater than or equal to. Well, it was greater than. Then we had a brand new profile that formed out here, daily profile that formed on Thursday, And the top of that is 150 and 21/32. But what's important is that right now it's trading below, and you can't really see it here. Well, you can see it. There's no reason for me to talk about something and then you not be able to see it. We just turn off price. Now you can see it. Oh, geez, now I actually got to turn. Let's just turn off the consolidation out here. You're going to see the center, there we go, is right there at 149.05. We turn price back on. You're well below it. Price inside the 30-year. Very likely headed to support. 146.22. We'll be back in a few more seconds than that.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 272, S&P up 28 points. Man, oh man, time flies, especially flies when you call in. So thanks, Brent, for calling in. Want to get email requests and requests inside the Tigers, and just makes the hour just fly, which is a beautiful thing out there. So, hey, we were looking at, or we had looked at the consolidation on a daily basis inside the 30-year Treasury, and perhaps that's the most important thing that we should wrap up the show with out here, and not referring to the 30-year Treasury, but instead the Dow Equity Futures Contract, because it too has been in a consolidation pattern. We can see this on the screen right here, right now, and the reason why this is important is we're just in the consolidation still, if we take a look at the Dow, which is performing nicely today. Now, if price breaks out of this consolidation and stays out of this consolidation, similar to what we saw unfold inside the 30-year Treasury, you would get the same outcome. That same outcome would be a measured move equal to, and if we're going to try to figure out approximately what that is, the top of the consolidation around 26, just call it 26,300, and the bottom around 25,300, so you got a 1,000-point move. So if, in fact, the Dow equity futures contract breaks out of this, continues moving higher, what you can anticipate is a 1,000-point move or more. That is equal to or greater than the consolidation. Now, if we go take a look at the Dow right now, priced in euros, the high, the closing high, was 23,231. 23,231. And if we take a look where we're trading right now, we're at 23,226. The actual high today has been 23,232. We have a slight break of the consolidation pattern inside of euros. So you know what this tells me, because the way that tops form is that the Dow should be able to get up and test its all-time high at 26,616 before we see any significant pullback. Hey folks, stay tuned. Your favorite polar bear's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Have a great Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.